In the meantime, markets will look to rebound from Monday's sharp sell-off that saw every single sector in the S&P 500 close lower. Joining us right now to talk about the broader markets is Jim Paulsen. He's chief investment strategist at the Leuthold Group. And Jim, none of us are experts on the coronavirus, but how do you kind of model that when you see markets sell off around the globe on news of the coronavirus?
You know, Becky, I think this is one of those things that you diversify for. That's why we diversify for these unpredictable events. I think it's hard to handicap this thing. I think a few things around it, though. We had sentiment that was extended going into this. We were probably due for some kind of sentiment gut check correction here. Whether it was the coronavirus, it probably would have been something else. I think that's still a biggest part of this pullback, is more that than anything. I also think, it's not like we have had no experience with these epidemics. We certainly have. And I think the odds are strongly in your favor that we'll get this under control. It could take a few months. But I think the market's reaction will lessen if we start to see a path out of this again. And we're going to quickly get back to probably what really matters and what investors should stay focused on is policy and the economy. And right now, I think both of those still look pretty good. So beyond just your normal diversification, I don't know if I do much of this unless, it gets very, very pessimistic. Market sells off more. I might be tempted to buy a little into that. But outside of that, I try to stay focused longer term. When you say diversification, you mean buy bonds? You mean buy other markets? You mean buy other sectors? What are you talking about? Well, I mean, I hope every investor is out the gate is diversified. Doesn't have all his eggs in one basket. Has a little of a lot of different things, and they do that because of unpredictable events like this epidemic, and so what I'm suggesting, Becky, is you're already prepared for this outcome, and you probably shouldn't do much more for this. Trying to predict epidemics, I think, is a losing game from an investment perspective. Jim, just in terms of the economy, if we go back to basics and we look at the earnings reports that we're getting this week, we look at the economy. I had kind of been thinking, okay, you got a China trade deal signed. Maybe that means that we're going to see more CapEx spending coming in from companies. But somebody pointed out to me this weekend that, look, there's different ways of looking at some of these things. Maybe we were watching people buy ahead of the tariffs, try and get some things in ahead of time. And maybe we saw a big boost in some of the numbers that we had seen over the last quarter or two. What happens now? We kind of have to work through that. Would it surprise you if you saw an overhang of activity where we need to work off the inventory that was built up because people were trying to get in ahead of tariffs? It's possible we had some of that activity, Becky, but I think more likely firms were reacting quite a bit in the last half of last year to a manufacturing recession that was pretty obvious not only here but globally. I think it created more conservative behaviors by and large. And I think as confidence rebuilds, I think there's going to be more catch-up played rather than the other way around. That's my guess. On the investment front, I think it's interesting. I did a piece a while back of dividing investment between new era and old era, and what I found was that there's definitely been a rollover in old era investment. That's manufacturing, industrial equipment, transportation equipment. That's definitely rolled over, but new era. Information process equipment, intellectual property spending, that's actually been accelerating since 2016 and continues to do that. And I think that explains a lot that old style business spending may have rolled over, but new style has been doing okay. And that might explain why tech stocks have continued to do really well. It also explains why productivity has probably picked up. So I think we're a little overly negative that there's been such a contraction in investment spending. I think New Era's held up and continues to do real well. Okay, great. Jim, it's good to see you, and we'll talk to you again soon. Thanks. It's hard for him. Thank you, Jim. I know it's difficult saying that the policies and the economy and all these things are great. I see you wince as you concede those things, but thank you for being agnostic enough to admit it, since this is what you should be doing. You shouldn't be
You know, things shouldn't be colored by your personal feelings, your Minnesota
Jim's
sentiment.
very good at that.
He is. He's very good at
weighing things
compartmentalizing things. Thank you.
up. That's his job.